All right, another week, another weekly recap. Okay, so we're gonna just jump right in. We're gonna go on reverse timeline. So with the markets closed on the Monday 17th, President's Day, our buys went through on the Tuesday. So that's one small call out is with DIVB pushing up past 50 on the price. We're now buying just under 2 shares. So at the beginning of the year, we were buying 2 and a fractional share as the price was under 50. But now that it's over 50, our $100 buy gets us a little bit under 2 shares. So we have the full share buy and then about 0.991. Okay. We have our CGDV buys, and again, another really kind of small note is that again, as they are two separate buys, one for full shares or full share, and the other a partial, the price at the time of transaction may not always be the same. So, for example, this buy of 2 shares was 37.15 share price. If we move to the partial buy, you can see it was about a cent less, so $37.14 for the partial share buy. So again, not a big deal, but again, if you're kind of new to this, you're wondering why there are two different purchase prices. That's why the actual time may be slightly different between the two buys. All right. On the 13th, we got our Apple dividend payout. Again, Apple's pretty small dividend. It's 25 cents a share. It's been about 25 cents the past three payouts, last 3 quarters. So we're about seven, a little under 7 shares. So that's our $1.64 payout, and that gets reinvested. Okay, so not much, $1.64, but again, any gain is a good gain. Uh, so after this buy, we have point 007 James Bond, point 007 more shares than we had on the 12th. So like I always say, don't despise small beginnings. So if you're, sometimes if you're new, you see, it's only, a quarter, a dollar 64. Again, if you kind of just keep in mind the long term, we're building, right? So every month, every quarter, even if we're not putting money into the stock or ETF, as is the case right now with Apple, with dividend investing, you're still growing your share count. Okay, whether it be a big payout, a small payout, all payouts matter. So, I would say to a beginners, kind of keep that in mind. So, next year will be bigger. The year after that will be bigger, provided they don't, cut their dividends. So, every year, every quarter, you're going to have more shares. So, if you're beginning, just kind of focus on growing that share count. And then kind of the probably the big kind of active play is NVDA. So we had an existing NVIDIA put that was expiring on the 14th. At that point, NVIDIA was doing pretty well. It was down. The option was down to $5, and so with the option down, but with the actual stock, the underlying stock, NVIDIA having a little bit of softness on the Wednesday, kind of made sense. Just kind of doing some math and risk analysis. It made sense to kind of roll that put out a week past, I'll tell you, a week and a half past expiration. Now, again, expiration plays, earning plays with any stock are always going to have an elevated risk, and with the market overall and NVIDIA in particular is going to have really kind of like heightened, you can say super risk. But I kind of did the math. The math was within my criteria and my kind of risk profile, and so I ended up kind of pulling the trigger and rolling the put out. So I did roll up a couple dollars. So rolled from 115 to 117, and the net would be the 274 minus the 5. So about so I was paid about $269 to take on that risk. So again, there's no free lunch. So I'm again getting paid to take on that risk of the NVIDIA put through earnings. Of course, there's no requirement to hold through earnings. Many people will play earnings, 2 or 3 weeks in advance, and if the option goes their way, so that 274 goes down to halfway, say 135, they may elect to close out the put before earnings. So again, in short, just because you are selling or even buying an option pre-earnings that's going to carry through earnings, it doesn't mean that you necessarily have to hold on to that call through it. If you're selling, you can buy to close before, and if you bought the option, then you can sell to close before earnings. In this case, I think my plan A is to hold through earnings, but we'll make a judgment call pre, and earnings are the next Wednesday. So in the week 8 recap, I'll update on where I stand with that put. And if you're kind of wondering why there are these cents, and I wonder, at least with Fidelity, when you're selling or buying, there's always fees. They have to get their cut. So because I'm buying, I'm buying this option to close. There's not a commission, but there is a fee of 3 cents. And with the newly opened trade, there is a fee again of 3 cents, and then there is a commission of 65 cents. So the actual put was 275, but that drops down to 274 and 32 cents in my account. Okay? So that's the plays for the week. So we have our weekly buys, our Apple dividend payout, as well as kind of closing and then opening a new NVIDIA option play. All right, now switching gears to the overall account update. So this is probably one of, if not the best week for the account, and I'll kind of go through kind of like line by line on why. So from the top, SPACs, as you can see, SPACs is actually higher than week 6, despite spending $200 on DIVB and CGDV. Again, the reason being is because although we spent $200 buying the new ETFs, we made $270 selling the NVDA put. Okay, so that's kind of again shows that the power of strategic option selling within an account is similar to a dividend itself. You can kind of generate income to essentially buy more than you would have been able to buy otherwise. So if you kind of look at SPACs, kind of year to date, we've spent about $1,400 total on DIVB and CGDV. But our SPACs account, our SPACs value is only down about 640. So it's about half of it's about half the negative value that it would have been if you were not selling options. So it doesn't mean to go out and start selling options today if you've never done it before. Definitely take your time and learn. But again, this shows what it can do for an account. SCHD kind of picked up a bit. Still kind of the laggard of the group. Again, it should pick up with the March dividend payout, but I think compared to the other ETFs, it's definitely kind of the slower one to start the year. JEPQ had a great week. As you can kind of see, it's actually now in terms of total return year to date, it has actually surpassed FNILX, which is similar-ish to the SPY. So year to date is about 5%. Of that includes the January and February dividend payout. So doing really, really strong there. FNILX again strong as well, about 4.5%. Apple still down, but a really strong week. I think week 6 it was at about $232. Now it's at about 244. So really strong week with Apple. I would say if I were put on the spot, I would say that, there was some news, but it could also be a flock to safety as well. People are getting spooked about the market. Apple, Apple's kind of been somewhat of a safe haven in past downturns, so that could be part of it as well. So negative, but a lot less negative than before. I'm sure that the dollar $1.64 dividend did help a little bit. Microsoft again still kind of in a do nothing range. So now it's kind of the worst performer, given Apple picked up a bit. But again, not a huge part of the account. So we'll just see how that does. And then the new ETFs, kind of still, kind of growing in terms of overall percent of account. DIVB a marginal lead over CGDV, but overall I think both are doing pretty strong so far, and positive. So that's number one. They're both positive for the year. DIVB up about $21, CGDV up about $17.50 rounded. So both positive for the year. And about this time in a month, they should have their dividend payouts. And then lastly, our NVIDIA puts. So as I mentioned in the weekly kind of activity recap, when this was sold, it was sold for about $275, and NVIDIA has a great run since then. So it's down to $108 in terms of value. So again, as a seller. But this is typically what you want to happen. You want the option to go down in value, as opposed to a buyer. So again, that's looking pretty strong. I could potentially buy to close and look to double dip, meaning if NVIDIA were to then, if the actual stock price were to go down again, meaning the CSP, the value would go up. So that 108, so that $108, could theoretically go up to, 130, 140, 150. I could make additional money by kind of double dipping. I think for now, let's kind of leave it as is. Double dipping is great when it works, but doesn't always work. So I think for now, just kind of leave it and monitor how it goes. So overall, the account is standing at 46,211 and 67 cents. So total year to date, about 1,421, representing 3.17%. Okay. So through week 7, again, not bad at all. I'm kind of pleased with the growth so far. Again, we'll see what the kind of stocks do. Apple, Microsoft, pulling down the account a bit. But I think overall, I think a solid start to the year. I think volatility will continue to be there. But I think the good thing with some of the dividend ETFs is kind of more definitely some very kind of like stable, resilient companies in there, so they should be kind of able to weather the storms that may be coming up. So that's a wrap on week 7. I hope everyone has a great week of buying, selling, trading, whatever your plan is. Execute and execute well, and on to the next one.